Hey everybody, this is Jim at SP500chart.com. It is after the close on June 5th, 2013, and we're going to take a look at the S&P chart, try to figure out what indeed is going on here. Other than we know it's a dip, we know it's got a target of about 1600, and the question is kind of the path. Really, the only question I've had is what's the path to 1600? And I thought it was one thing yesterday, but today told me no, it's going to be more of a it's going to be a less enjoyable ride. So before we get into it, I just want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, we're starting off here looking at a 30-minute chart. And yesterday, it was kind of looking to me like maybe the S&P was going to be coming down in a descending wedge, but we spent most of the day underneath this line right here, which sort of makes me look not too horribly smart on that call. So I'm going to keep this here just because it could have some effect on future events, but I'm not that convinced that really it's got much influence on things. What is kind of interesting, however, if we look at a 15-minute chart, is at least these two dips on the 29th and on the 3rd seem to line up pretty well with the lows of the day. So I'm going to keep that on the chart more out of curiosity than anything else, to be honest with you, because we still have a target of about 1600 or a little bit lower from whatever we decided to call this pattern up here, whether it is a head and shoulders pattern, with this being a very, very short left shoulder, head, and then two right shoulders. That looks a little funky to me. But if that's the case, then we measure our target. Actually, we would measure it right here. And then from the point of the breakdown, you'd see we would get that target of roughly 1600, maybe the high 1590s. And I'm kind of thinking the high 1590s because that's where we should find some gap support, as well as some broken resistance support, because 1600, or actually more like 1598, was strong resistance at one point. Now that that's overcome, we would look for this to likely produce a bounce, and that falls pretty much right in line with what we're expecting from the breakdown of this fairly small topping pattern. Now, here is the good news. The bad news is the descending wedge pattern is called into serious question. And you might say, well, what's the difference if we're going to 1600? It doesn't. What if it goes in a straight channel, straight line, descending wedge? There is a difference. And the difference would be, had we gotten there in a wedge, then that would have been telegraphing what should be an eventual bullish move out of that pattern. But regardless, whether it's a wedge or a channel, we still have really the same line up here that we would look to as a signal that the selling is over, because this line has 1, 2, 3 touches. It could not get up to that line on on the 4th or on the 3rd, and the reason is because it back tested this line, which served as resistance, preventing that from happening. So that, I find that kind of interesting. If we make a parallel line here and snap it down here, that might be worth keeping on the chart just in case we come down and we tag that level tomorrow, which is quite possible. So in other words, we still have the same target, roughly 1600, 1598, and I think we still have the same trend line that will serve as an indication that our selling is about done. So I can't really think. Oh, it's kind of interesting too. But I made this little gray line on the chart. You remember that? And I said, I don't think that really is going to amount to a hill of beans. Well, it's kind of interesting. Really, as we extend that line on down, most of the action that's taken place over the past 2 days has pretty much been, with a few dips underneath it today, but it's been pretty much staying on top of this line right here, which I think is kind of interesting. So if we're looking at the big channel, then this would be the line to break to signal a likely turn to the upside again. If we're looking for small intra-channel lines, then maybe you might want to keep an eye on this little resistance line right here. I'm not saying that getting over this line would tell us that the market is getting ready to head back up out of this channel, but I think likely getting over this line, we'll make it orange. And let's go ahead and make this orange too. Getting over this channel or breaking this set of lines to the upside could be a signal that at least we are now going to go back and challenge this resistance line again. So guys, there you have it. We're pretty close to getting down to that 1600 high 1590s level that is kind of projected by this topping pattern. And let's see, we have that 1598-ish, 1597 line that's actually just a hair above that full downside target. So let's see what happens if and when the S&P gets down to this level down here where it could get into some nitty-gritty. So that's your video for June 5th, 2013. Hey, does this mean sell in May and go away would have been the right thing to do? So far, there's our top, and it was in May. We'll soon know. Hey everybody, thanks for watching. Thanks for your support. Take care.